Now, as we are waiting on a slug of data to come through from the United States, the data flow will be an important gauge together with the latest policy meeting minutes that came through just overnight on the timing of the first rate cut. Has anything changed in your projections?
Nothing has changed in our projections. I think what you're seeing is an inevitable overestimation on the behalf of market participants. They overestimated the impact of interest rates going higher and how long they were going to stay higher for. And on the other side of it, as interest rates are coming down, they're overestimating how many cuts will take place and how quickly they will take place. We've maintained somewhat of a middle-of-the-road stance on this, that we think that likely interest rate cuts that will come from the Fed will be driven in more of a preventive fashion, just given the fact that restrictive rates probably aren't necessary to tamp down excess inflation at this point as inflation is coming off. So we look at mid-year being that jumping off point sometime around June, which is a little bit behind the market. Also, the number of cuts heading into year end, just given the fact that it will be starting later, we think the Fed will not necessarily be compelled to cut interest rates more aggressively. It all sort of portends to a nice middle-of-the-road scenario for us where we think that growth this year could potentially be much better than expectations. And that's something we're really betting on with our outlook for this year.
We've seen a lackluster start to trade this year. Could it be just profit taking on the back of a big run-up in markets last year?
Absolutely. I think where you look at, there was a lot of profit chasing in the month of December, especially where you saw people just trying to get positioned, trying to be in markets towards the end of last year. And then all of a sudden, the first waiver of data release that comes out there, you can see there were some bets that the Fed was going to come out last night and the minutes were going to have some sort of projection for when they were going to begin cutting rates or some indication that they might be more aggressive in how their interest rate cuts might come through. When those weren't delivered in the words that came out of the statement, you'll start to see some of that unwinding. And a few days before that, you started to see a little bit of that unwinding of those risk positions. But if you take away that short-term volatility, the picture still remains very rosy heading into 2024 as we look at what's going to happen probably throughout this year with earnings on corporate earnings, as well as just that continued resumption of the decline in inflationary pressures. So it is really, we talked about Goldilocks scenario last year, and we found that just right bowl of porridge for this year for what the markets are setting up for.